Gautam Duggad is now with us. He's head of research at Motilal Oswal Financial Services. Gautam, good to have you with us here. Good afternoon. Thanks for your time. Prashant this side. You know, before we get to the broader market and overall earnings expectations, etc., let's talk about some of your recent reports, right? I think you guys initiated on PN Gadgil recently. There was the coverage on Swiggy as well. And one thing kind of is common, both very different sectors, both in the consumer space, but one common thread is, compared to the leader in that space, in the respective areas, both are at a discount. PN Gadgil probably the cheapest stock in the jewelry sort of space, and Swiggy, big discount to what Zomato is trading at. You know, is that kind of so my question is, comment on PN Gadgil, how strongly do you feel about this theme and the stock per se? And Swiggy, did you anticipate this kind of a move so sharply and so quickly? Go on, Gautam.
Yeah, hi Prashant, good afternoon. So, see, jewelry is something which we've been liking for more than a decade now, and within that, Titan, Kalyan have been our preferred ideas. Titan for almost 15 years, Kalyan we've recently covered, added in the model portfolio. Stock moved up 80% in 3 months, so we've trimmed that position. As far as PN Gadgil is concerned, you're right, it is still trading at a discount, but do remember that a lot of these companies, when they list, initially they trade at a discount to the sector leaders, and as there is more history of their performance which is available, as the quarters pass by, as you see the actual performance, then slowly the market starts re-rating them, right? So absolutely no doubt, jewelry, both from a medium to long term as well as a short term perspective, we continue to like, because the wedding season is going to be mammoth. You know, you have about 48 lakh weddings scheduled in the next 5 to 6 months. So the entire space will remain very vibrant in our view. Specific to PN Gadgil, I think they've done very rapid expansion. I remember in the Navratras, they opened 9 stores in 9 days. And plus their same store sales growth is also picking up quite well. So that's a space where we remain positive, have been positive for a very long period of time. As far as Swiggy is concerned, no, we didn't expect such a sharp rise post-listing. But see, Prashant, quick commerce as a sector is growing at a very high clip of growth rates compared to your other consumer categories, which are actually struggling. You've heard ad nauseum about the slowdown in urban consumption, the struggle of consumer staple companies for last 2-3 years now, or if I can stretch, if you look at the last decade, the trailing 10-year compounded revenue growth of the consumer staple companies is sub 10%. So that's very substandard in that sense. In front of that, if you see quick commerce, you're seeing growth rates in excess of 30%. And the expectation of the next decade is that they'll continue to grow at 18 to 20% at least. And we've seen in some of those cases like Zomato's and all, where the moment growth rates kept climbing up, the benefits of operating leverage have started trickling in. So when Zomato listed 3 years back compared to that and today, the financials, there is a huge difference. And of course, in between, you've seen Blinkit take up a huge portion of the total value. So no doubt in our mind that quick commerce as a space will become very big. In between, there will definitely be a lot of volatility and intermittent corrections that you will see. But yeah, to answer your specific question, Swiggy is not something where we expected such a sharp move of 40-odd% within a month of listing.
Gautam, hi. Lots of CEO presentations at your conference. You've done a deep dive across various sector, investor talk. Take us through some of the key highlights, insights that you learned over the last 2 days.
Yeah, so Rima, this is our 10th edition of Ideation Conference, and this is specific to only mid-caps and small caps, so a lot of interest here. You also remember that the mid-cap, small-cap indices have corrected less compared to Nifty. In fact, this is the first instance in the last 15 years. Whenever Nifty is corrected more than 10%, usually the mid and small-cap indices are always corrected much sharply, given the inherent volatility and float and all. This is the first instance where Nifty corrected more than 10%. I am talking about the levels somewhere about mid-November when Nifty was down more than 10% from its September highs. And mid and small cap indices were down much lesser compared to Nifty. In fact, as of yesterday's closing also, if you see, mid and small cap indices have hardly 2-3-4% away from their September highs. So there is tremendous interest in that space. And given the inflows that you are seeing in the domestic mutual fund side, clearly the mid and small cap funds the thematic funds have attracted a lot of inflows. So one of the themes that appeals to us, and we published a very interesting thematic initiation on that space, is capital markets. So you've had a couple of capital market companies present here who've been talking about a long runway for growth ahead, given the financialization of savings which is playing out. You merge that with the innovation and technology disruption which is happening. So clearly, while those spaces have already seen a lot of run up in the last 6-12 months, if you plot the growth for next 3 to 5 years, there remains no doubt in our mind that whether it is AMC, wealth managers, exchanges, depositories, intermediaries, or even brokers, the growth prospects are pretty strong there. Secondly, we've seen a lot of interest coming in some of the niche tech spaces, healthcare companies, EMS, of course. We had a very wide representation from EMS spaces here. You've seen some of the stocks have hit new highs in the last week or so on the back of announcement of new tie-ups with various companies that they have done. So yes, I mean, and then of course industrials. So those are broadly the spaces: industrials, capital markets, healthcare, technology, and of course the broader financial space, which are finding very good interest amongst the investors who are attending our 10th edition of the Ideation Conference.
Hi Gautam, good afternoon. Always good to hear your thoughts. And that was a very valid point, right? Everyone's talking about the Nifty being 7-8% away from the fresh all-time highs. The small cap index is making fresh all-time highs almost on a day-to-day basis. So it's a big divergence in comparison to what we saw in the past. Since you're doing an generation ideation conference, the biggest line was for which company this time, Gautam? I haven't yet heard. Normally I get some sound bites from there. But highest amount of interest in which company, or if you could at least zero down on the sector?
So, Nigel, very tough to zero down on that because there are 50 companies, and virtually whichever meetings I have attended, I have seen 20-25 participants in every meeting. But yeah, I mean, capital market, industrials, EMS, those are three broad areas which are seeing maximum investor interest at our conference. Okay, and EMS, in your, according to your research team, which is best placed? I mean, Dixon, people said expensive at 10,000, 12,000, 15,000. It's 18,000 today, and still there is so much interest, and there's a good growth outlook. So clearly, the street wants to latch on to this theme. Whether it's Dixon, PG, Electroplast. We had the management of Keynes earlier today as well. Something extremely important. So what's the pecking order? So we like Dixon the most. That's part of our model portfolio, and also part of our top 15 ideas in the large cap space. It's crossed 1 lakh crore of market cap, and what a phenomenal journey they've had. IPO'd at 2,000 crore market cap in 2017. Of course, the company was very different then. Today, if you look at the top line, I think they're averaging somewhere about 37,000 crores of top line. The company has changed its complexion completely, and every few months they're getting new business, new client, new contract. So that remains our number one preferred idea. And then, of course, we like Amber as well as Keynes. So Keynes did participate in our conference. If you look at the numbers of Keynes also, in the first half, they did the profits which they did full year in FY24. So clearly, the growth rates are very high in some of these spaces, and which is where you are seeing markets ascribing them very high PE multiples, right? And not just the growth rates. I think the visibility of that growth rates from a medium-term point of view, at least next 3 to 4 years, the visibility is there. So which is why you're seeing such a solid interest in that space. And given that the government itself has been very, very pro, EMS rather, Make in India, manufacturing and PLI, those kind of things which the government has taken on priority. So clearly top down as well as bottom up, it marries very well for this space.
All right. What about, one stock I want to ask you about in particular is Trent. You all were on top of it, Gautam, and I think you were at the forefront, from much lower levels. They had one disappointment. People were trying to find a fault to the last quarter's numbers, and the stock went from 8,200, I think, to 6,300. It bounced back from there. At current pricing, what's the view, the brokerage, the call that you all have as a house?
Oh, we still like it. You're right. We upgraded the stock about 2.5 years back at 1,200 rupees. And since then, we've not changed our view. And the reason for not changing that view is clearly the growth differential. In this space, if you see Trent's peers, they're struggling to grow upwards of 15% on top line. Whereas Trent has consistently been printing top line growth upwards of 45-50%. And of course, bottom line has grown much sharper. So and we've seen, and we've discussed this often in your shows, that in B2C spaces in India, wherever there is strong growth and more growth visibility, the market has been very generous in ascribing higher multiples. So whether it is Trent or Zomato or Varun Beverages or so many other companies representing the B2C segment, wherever growth has been sharp, the P multiple re-rating has also been equally sharp. And as far as Trent specifically is concerned, our view on the growth visibility remains very intact, led by Zudio as well as their core business. So yes, there has been some correction because market has also seen some correction and a little bit of a disappointment which was there. But the fact that the bar that Trent has set is so higher that even 60% growth seems like a disappointment. So that tells you what kind of journey they are on. As far as we are concerned, we think the growth is going to remain intact there. They're gaining market share, and in a category which is not growing so sharply, they've been able to extract that growth rates through innovation, through new store expansion, and sure execution excellence that they've displayed over the last few years. In fact, I think it's now part of the Nifty also. So the moot point is we like Trent still.
Okay, thank you very much for joining in.